Welcome to Markets Now. I'm Michelle Rook with Martinson Ag. We're seeing mixed trade in the grains with feed grains lower, soybeans higher, and we're kind of mixed in cattle and hogs. And Randy, let's start off talking a little bit about kind of this pullback in the corn market today. Is that harvest pressure, technical selling? What's going on today?
Well, I think it's a little bit of both, but I think it's a little more on the hedge side. Right now we've got some, adverse weather that's expected to be coming into, the northern plains, the corn belt, and that's going to slow down harvest. If this comes into fruition, the forecast is calling for, it's likely combines could be parked for a few days. So I think there's a lot of aggressive movement to try to get as much harvested as possible. So I do think it's a little bit of hedge selling that's hitting the market. Technically, we're still flirting with, with the low end of the trading range. We'll see if that can hold.
Yeah, we kind of need to hold this like 485 area here today as far as support, or what are you watching?
Yeah, that's the level. We need to hold that. If we don't, I think we could break down and trade down to that 470 level, which that's lows we haven't seen for a long time in that corn market. And right now, with a little bit of the yield, we're starting to hear a little. The yields are coming in fairly decent. Some are quite a bit up here or in the north are a little better than expected. So there's a lot of corn coming to town, and I think that could be adding a little bit of pressure.
Yeah. Also, some discussion about these Argentinian rains maybe weighing on the market, although I don't really feel like we had much South American weather premium in to really take out.
Well, that's true. But the market is, when you're looking for bearish news, you'll grab onto anything to help pressure it. And right now, I think that's part of it. But yeah, Argentina did pick up a 1 to 3 inches. It's not going to save the crop. We're already looking at, some of the corn acres are already being switched to some later season crops just because of how dry it is. So I do think it's going to be beneficial, but it's not saving the crop.
And the corn market is also being pulled down, Randy, by the lower wheat market. So is that technical selling, or are we taking out a little war premium, or what?
I think it's war premium in the wheat market right now. Right now the headlines were that Israel is now second guessing or rethinking the boots on the ground, the on ground assault. So that right now is kind of de-escalating a little bit of the war in the Middle East, and I think that is taking some of the premium out of not just the wheat market but also the crude oil market.
Yeah. Also, we have some rains forecasted, I think, for part of HRW country. And then we also have that higher dollar today. So is that factoring in?
It is. Once you start looking at, like I said, the negative news, everything piles on. And with the stronger dollar and the fact that we are looking at some good rains moving across the winter wheat region, I think all that is putting a little pressure on, the Chicago. And we're also looking at Kansas City getting closer down to their low end of their trading range as well. Chicago is still holding up a little bit better. So I think we're still looking at less acres overall, but it looks like it's going to be more in the soft red area more so than in the hard red area.
Gotcha. And maybe that's because of the function of China kind of being in the market, or not?
Yeah, I think a little bit. I think that's helping a little, but the fact that wheat just isn't competitive right now with corn or soybeans in the corn belt, I think they're just looking at less acres next year.
Soybeans are a little bit higher here this morning, although we're still under $13. So is that just a little short covering pop here, or what's going on in that market today?
I think beans are still, trying to stay within their trading range. We still have tight supplies. There's still rumors that China is short bought, that they're going to have to come to town and buy from the U.S. in November, December, and January because of tighter supplies in Brazil. So right now, I think the market is trying to stay as honest as they can just to wait and see what happens. We had good shipments on Monday, and that tells us that there is demand for our product.
Yeah, the other thing that's been holding that market together here has been this push in soybean meal prices. And of course, yesterday we saw a bit of a reversal there. Is that because these Argentina rains that we talked about early, or is there something else going on there?
No, I think that was the big part of it. For 2022, we set a record for soybean meal exports, the highest ever amount of exports in history for the U.S., mainly because of the droughts in Argentina. We're expected that, to continue to see that exports stay strong. But if they are able to recoup or produce a decent crop in Argentina, that certainly will hurt our exports.
And the cattle market, let's go over there because tough technical day down yesterday, a meltdown due to the cattle on feed report bearishness. But, was it just that, Was it just the bearishness of that report or what?
I don't think so. I mean, I think that piled on a little bit, but I mean, you're looking at some economic concerns yet. Chairman Powell came out and said that, he's likely not going to increase interest rates in this next meeting, but there will be an increase and we're going to sustain them. We continue to see the unemployment numbers, be a little bit troublesome for the economy. Inflation's still a concern. And I think it's just the fact that, we're seeing more cattle come in from other, being imported from Mexico and Canada, adding to it. But I think it was a little more than just that. I think it was just a complete collapse in the market.
Yeah. And, let's talk about the bearishness of the cattle on feed report. Placements number was the big one. And, why do you think we had so many more placements than were anticipated?
I think the producers are just seeing that they can sell the calves, at good values right now. That's the one other part, is that cash hasn't quite followed completely with where the futures market's been going. So the cash is still holding up fairly decent, and producers are pulling the calves off of the pastures and being able to get that $15 to $2,000 depending on their weight. And I think they're seeing that and saying, why background them? Let's just move them and look at next year. So I think there's a lot more calves coming to town than we expected.
Chart damage. How much did we do in both the live and the feeder cattle futures? Where do we need to hold today so the funds don't continue to liquidate?
I think we're down to, pretty close to where we need to be at to hold to, you look at what we closed the gaps that were created back in June. So right now this market is sitting down at some major support lines right now. We don't have much more room to be able to slip before this market is going to continue to see that sell off. So I think we're right at our support levels that these markets have to hold.
Yeah. You said feeders, you told me off air, were like down $30 off the high. So we've had a pretty good correction already.
Exactly. Yeah. From our high that we set, 5 weeks ago to where our low was yesterday, it's almost exactly a $30 decline. And one would expect, in 5 weeks, seeing that kind of a hit, you'd see some sort of a recovery, technical or just a dead cat bounce. So we would expect to be able to get at least $10 or $15 back before this market completely collapses again.
Okay. And right now, as we speak, I think we've got kind of a mixed trade going on in the cattle. Hopefully we can kind of hold on and consolidate today. Hog market, we are just barely off contract lows, but, do you think the little pop in the front part of the board is just because we have such a big discount to where the index is, or are we done going down?
Oh, I wouldn't say we're done going down. I think we could be seeing some spreading taking place between between the cattle and the hogs. But, there again, I think that the hog market is still seeing a little bit of lower import or lower exports. We're not seeing the demand, and all that, I think, is kind of it's a breakdown in the whole meat complex, I think, more than anything.
Okay. Thanks as always, Randy Martinson with Martinson Ag, and that is Markets Now.